All right, welcome back to the second daily discernments. Turns out two things, 2 days in a row to have something to talk about, and amazingly enough, I have a few things to talk about, not just one or two. We'll start with the buybacks because that was what we covered yesterday. And I sent out the meme with the little Cheeto door lock trying to hold the door open or door closed yesterday, saying, and I talked about it on the show yesterday. The buyback's not going to be big enough. They're going to have to move to QE, and that the chances were the market was going to pressure this stuff because that's what markets do, because it's too small. It's not enough to hold back war inflation and El Nino inflation. Sure enough, today, the bond market completely retraced the whole move of yesterday. So we had this significant move in the markets, manipulation, whatever you want to call it, intervention, if you want to take a little easier word, to get yields down. And that's completely undone literally the next day, showing exactly what I'm talking about. It's not a real enough solution. So eventually we're gonna have to get to QE or something like QE, like I said yesterday. And the pressure to do that might come quick and might come with force. And to talk about the war and that El Nino inflation, yeah, oil up again today, and oil kind of has been going up almost every day lately. And then you can look over at ag prices, almost all ag prices up today, and I think you can continue to see that. And you're starting to see input prices go up with fertilizers, stuff like that. So this just gets really hard for the Treasury and the Fed to do anything about anytime soon that isn't in many ways counterproductive. But they're going to have to, because again, they can't let yields go 6-7% out on the back end. They just can't. So they won't. But how long it takes for them to truly respond will be interesting. Speaking of that, today they did respond. Scott Bessent came out, went out of his way to say, "Hey, yesterday we said we go to 2 to 4 billion. Hey, they may be bigger than 4 billion." And the market was like, "Yeah, I don't care." Just didn't really move the market at all. So, as I keep saying, gonna need a bigger boat. Be fun to see what they do on that next. Brent oil passed 93 today, so again that pressure is mounting. Gasoline is up past 410, I think, a gallon. Diesel like 550. So the pressure continues to mount. The administration did come out today and announced that they're going to let winter gasoline be pulled forward and be used earlier than usual to help bring down the price with some extra supply. Obviously, that will help until winter. Like, I think that goes without saying that that's sort of a seed corn eating strategy that has its own potential downside risks come winter. So that'll be interesting to watch. Staying with sort of this theme, the big thing is for the last week or whatever, maybe week and a half, has been, oh, don't worry about we're not gonna bomb Iran anymore. We're gonna pivot to this massive, huge, unprecedented economic warfare against Iran. And we saw perhaps the first leg of that with the Emiratis announcing that they are basically delinking themselves financially, economically from Iran. Now, I've also seen some reporting that says, yeah, but that's actually the way they're actually going to roll that out is going to be tiered. It's not going to be all at once. They're going to start with some small stuff and maybe keep moving up. So that may not have the teeth in it that it sounds like early on, which could be more kind of like, we've had a lot of information warfare without anything to back it up, obviously, in the last 6 months. So even this UAE is going to do this thing could be a little bit of a more of a information warfare than an actual economic warfare thing. We'll see. Maybe it ends up being very real. And if it is, like I've said, that is substantial. If the UAE really were to like cut every cord between them and Iran, but it's hard for me to imagine, because if they do, they're just going to get bombed by Iran, and that would be problematic. Obviously, they lose out on a lot of income as well because the reason they have a lot of financial and economic ties is because they make a lot of money doing it. It's fruitful. So that'll be interesting to watch. Next week, I guess we're going to have a presser Monday about all the economic warfare stuff we're going to do. And they're teasing kind of like secondary sanctions on countries that do business. We're going to crush the countries that do business with Iran. The problem is the countries that do business with Iran are people like Russia and China in the Gulf. So like, are we going to crush the Gulf? Are we gonna do something to China? Like, that's the area where, like, I don't think so. Are we gonna secondary sanction China in such a meaningful way that they reduce ties with Iran? I'm gonna get on a limb and say no. And in fact, if we try that, then they'll just cut off rare earths, and we won't be able to make stuff in America. Just like we've already played this movie out. I've seen some people speculate like, yeah, but Xi's coming for this big meeting. Maybe he'll agree to help us out. that would be bidding against himself. Like, China wins on such a big level strategically from the U.S. bogging itself down in the Middle East. This just further makes Iran a massive client state for them as it weakens Iran and makes them more dependent on China. So the last thing I really expect them to do is like stab Iran in the back. Could they help out in some way that is window dressing and meaningless? Sure, like wouldn't be surprised. And I have no doubt like China would really love to get more oil and chemicals, feedstock and everything out of the Gulf or fertilizers, whatever it is they need that they don't make for themselves. Yeah, I have no doubt they would rather get all that stuff out. But I think what they win long term from this conflict is a lot bigger than a few missing barrels in 2026. So I'm highly skeptical we're going to actually do anything on secondary sanctions in a way that matters. But what I will say is if we do something that bites, the failure of this thinking is that Iran is helpless to do anything in response. The reality is, obviously, they can play the energy card. They can bomb energy infrastructure. They can mine the whole strait. They can hit economic targets instead of just energy targets. So data centers. They can cut undersea cables. They can go after the banking system and all of our ties with the Gulf through financial and banking system stuff. They can go after ports. There's a lot of targets they can hit. Like, we can't forget that they have really capable drones and missiles that they can do a lot of damage with, and to include significant economic damage. As far as economic warfare goes, we've spent a lot of our cards there, right? Like, we have played most of our good cards. We've been sanctioning the living hell out of Iran for decades. We've ratcheted it up in the last few years. We ratcheted it up more during the war. So the thought that there's this like low-hanging fruit that's going to devastate their economy and take down the regime like seems pretty wishful and kind of fanciful in my view. But that's the narrative Besant was going with today. Like, they were going to take down the regime with this economic warfare. Well, if we could have done that, why would we not have done that instead of having to put troops in harm's way to begin with? Why did we wait 6 months to implement this great strategy? All these questions kind of answer themselves, obviously. So, but I'll be interested to see what they say Monday, and if they do something real, then I'll look for very significant pushback kinetically from Iran. And to that point, Scott Besant also said today, like, oil spiking today, and I don't understand that. Like, they're misinterpreting what this economic warfare thing is. No, they're not. Like, what the oil market is saying is like, oh, well, Iran's going to hit back and probably do some damage to energy markets. So I have to price that in a little bit. But this also reminds me of what I said yesterday. Like, hey, what if this thumb on the treasury scale is the thumb that was on the energy scale, and they had to take it off? Like, we can't put our thumb on energy anymore for whatever reason. Again, maybe it's people not wanting to be the mouthpiece that destroys credibility anymore. Maybe our relationship with Pakistan took a step back and they're not going to do it anymore, whatever the case may be. Well, we have another day of energy up, no jawboning there. Not only no jawboning there, but kind of like an admission that the prices are up and it's frustrating. Again, not that I'm saying we can't jawbone oil again. We probably will, but still interesting. The other thing I was going to talk about really quickly, honestly, I'm probably just going to note it, is Walmart's earnings were pretty bad, and Walmart got hit pretty hard today. Notable to me just because it's kind of a validation of what should be kind of clear already, but like the real income's taking a hit from the inflation that we see from the war, and honestly more and more every day it's going to be from El Nino, not to mention the AI build out and all the other things that are inflationary right now. Like, that inflation is outstripping wages, which goes without saying that hurts people's spending power. So to see some earnings misses from people like Walmart is not surprising. I think we're going to get more of it. Obviously, some retailers are going to still do surprisingly well. It's not going to be some giant earnings catastrophe for everyone that sells something. But worth noting, when real incomes get hit, like, yeah, well, so does consumption, right? Unless you take the savings rate to absolutely nothing and people running up on credit cards, like, you're going to have consumption problems. So worth noting. Another thing, Anthropic. Now everyone, all of a sudden, I'm seeing all these reports that people are expecting them to raise more money than SpaceX. Just notable to me because, again, this goes back to the supply thing I keep talking about, and how the reason I don't think the market can be strong is because as soon as it gets strong, someone's going to sell you some stock, and it makes it really difficult. And I think that's one of the problems actually Chinese market has right now. They've had some blockbuster tech IPOs, which is awesome for them long term, and it's going to add tons of value to their equity market over time. But right now, it's just adding a bunch of supply, and that makes it hard to go up. And you've seen that. So for the U.S. market, I think that Anthropic IPO is going to hurt. Now, it's going to be interesting to see the way they structure the lockups and everything. That was the interesting thing with SpaceX, was interestingly engineered lockup situation. They tried to engineer a squeeze on the front end that people could sell into. Basically, none of it's really worked, but that's something to keep in mind here coming this fall, that it could hurt markets, is the Anthropic IPO. And the last thing I'll mention is a trade deal announced between China and Switzerland. Notable. You basically just have almost a full-blown free trade agreement at this point. The Swiss already weren't really charging any tariffs on China, very, 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 very little. But China still had a good bit on Switzerland. They essentially dropped them. 99.8% of Swiss exports to China are now tariff-free, and all the important stuff that they build that is now tariff-free, like watches, like we all know. And that was interesting because that was like a big give from China, which you just don't see. Like usually China extracts every inch they can in any kind of negotiation economically. They don't give for the sake of giving. It's just not how they roll. They shun soft power at every turn, and they always seem to maximize what they can get for themselves in like a very sort of zero-sum game way, even though they always present themselves as very win-win. In a lot of ways they are, like from a markets standpoint, from a basically, frankly, in an Adam Smith kind of way, like, right? We'll help you, you'll help us. But they're also very predatory in many ways, like as we, I think, all know. Very, very well done predators, like they're good at it. So to see them like basically give and not get much back in this update to the free trade agreement was notable, because it felt like, are they like giving something to a European economy to gain like goodwill and soft power? Like, because if so, that's interesting, especially considering the fact that Switzerland's had tough negotiations with the US that haven't really worked, haven't really been finalized. So to see them do this deal where they get a lot from China, where they basically have free trade going back and forth, that felt notable. And if I'm right that maybe this was a turning point where China does a little more to gain soft power and not just to win every negotiation on the purest terms, that will be important to watch. But that's it for me today. That was 2 in a row. I expect kind of 2 to 3 a week. So maybe a few days before you see me, unless we get some more interesting things happen tomorrow. We've had a cluster of good stuff for 2 days, but we may go a week now with nothing we're talking about. We'll see. But until next time, cheers.